Blue Cross and Blue Shield companies formed out of a need to provide affordable health care to teachers, loggers, and miners. We are now celebrating the 60th anniversary of the Blues, developing the National Labor Office to strengthen its commitment to organized labor. Blue Cross Blue Shield's National Labor Office remains focused on America's workers, advocating for affordable and equitable health care, partnering with strategic alliances to provide industry-leading products and services, and proudly serving more than 18 million unionized workers, retirees, and their families. Working hard for America's working families, for the health of America. Learn more by following them at Blue Labor on LinkedIn and X, formerly known as Twitter. And don't forget, you can check us out on Facebook or follow us on X, formerly known as Twitter. That would be AWF Union Podcast, AWF Union Podcast. Everything is archived there. What we're doing today is another segment we call Labor 131 as we commemorate and celebrate the 131st anniversary of the creation of Labor Day as a national holiday. And the guest to talk about some labor history is Christopher Shaw. Mr. Shaw is the author of Money, Power, and the People, the American Struggle to Make Banking Democratic, and also First Class, the U.S. Postal Service, Democracy and the Corporate Threat. Mr. Shaw, thanks for joining us here on America's Workforce. In fact, we had a conversation about that very subject not too long ago with Mark Dimenstein, president of the Postal Workers Union, because apparently they're trying to take the Postal Service, put it under the arm of the Commerce Department, pretty much break the union, sell off all the postal offices in America, and make Wall Street even richer, which is kind of what we're going to talk about. That's the flavor of the show today. I understand you have worked with Mark before. Is that true?
I've done some work on some projects for the American Postal Workers Union in the past. Correct. Yes.
Good.
Trying to push back against privatization and maintain that essential public service.
That's not an easy task. A little bit more about yourself. I understand you've published research articles in a dozen academic journals. Anything you'd like to call attention to?
Well, I'm interested in talking about how labor history connects with financial history and banking history. That's been a major focus of my research over the years.
I see that you received your PhD in history from the University of California at Berkeley, and you have worked for the American Postal Workers Union, too. So let's just call that out. Let's talk about money and politics. Let's go back to your first book, Money, Power, and the People, and the connection here, because, and I think we're just seeing more and more money in politics, and that has resulted in a decline of unions. Talk to me about that. What's going on here? And also, we could talk about the workers fighting back. Can we start right there?
Yeah, well, I mean, I've written about strikes, traditional subjects of labor history, but a lot of my research looks at this other dimension of labor history, which is that working class people are thinkers, and their ideas have produced important reforms in fields that are really far removed from the workplace, from the factory floor, namely banking, money, finance. A lot of the essential features of the American financial system were in part influenced by workers, such as the Federal Reserve, the fact that there is actually some degree of public accountability there, that isn't just a completely private banker-controlled central bank, the fact that we have the FDIC to protect our deposits. The bankers did not want that reform. Workers pushed for that reform. So that's been a major feature of my research on labor history over the years.
Now, didn't a lot of that originate out of the New Deal when Roosevelt, I mean, keep in mind, you had the stock market crash in 29. A lot of things were deregulated back then. Roosevelt comes in office and said, we got to change things. But aren't these the things that were created back then that are kind of under attack right now?
Well, that's exactly right. We have this legacy of labor activism that dates back to the New Deal and even before that during the Progressive era, where the bankers crashed the economy and then they didn't want any reform. And it really took working people pushing for the kind of reforms and regulations that then put in place a financial system that then allowed for the kind of mass prosperity that we saw in the middle of the 20th century. So I think one thing that's key to recognize here is that if you look at the 19th century into the early 20th century, there were regular depressions. Back then they called them panics that are happening every 10, 15, 20 years. And that has a lot to do with the instability of the banking system. And so working people demanded regulation of the banking system in order to stabilize it and stabilize the economy and cut down on those periods of unemployment and hunger that they'd experienced for a long time. So that's the legacy and the history that working people are responsible for putting a financial system in place that made the country a lot more prosperous in a steady way in which the prosperity was shared more broadly.
You would think that the banking system would be stable. It would make sense that it would be stable. And you pointed out that there was instability in the banking system, and often things would crash, and then obviously everybody would come together to save the banking. Why? I don't understand. How did they become unstable? How does that happen?
Well, when bankers were operating without regulation, they were often not acting with prudence. They were taking risky moves, doing risky decisions, and then that would put their institutions, the banks, in a precarious position. And then when something went wrong in the economy, the business cycle hits a downturn, something like that, then they're in a very precarious place. Then the banks start toppling, the banks start closing. You have bank runs. People get scared they're going to lose their savings. They're running to get their money. And pretty soon the entire banking system's in crisis. And then as a result, the entire economy goes into crisis. Mm-hmm. So that was a pattern. It was basically a cyclical pattern happening on a pretty regular basis until we got the regulation in there to stabilize the system and make it operate in a safer manner.
Now, a lot of that came, again, during the New Deal, and a lot of that has been eroded since then. Glass-Steagall Act, for one, I recall that. And that, I think, when Clinton was in office, some of that kind of disappeared. Okay. What happened in 2007, 2008? That was pretty much what you're talking about here. Everything kind of unraveled then, didn't it?
Well, yeah, Glass-Steagall dates back to 1933, and the idea was that you put a firewall between investment banking, so this is your Wall Street taking risk on the one hand, and then just your regular banking, your savings account, your checking account on the other. So that way they can't take the money in your checking account and start gambling with it on Wall Street. That was the idea behind Glass-Steagall. And the other thing it did is it really cut down on financial monopoly and banking concentration, because when you put that wall in place, that means that you aren't going to have banks that are quite as large. And so therefore, the whole too big to fail feature of banks gets diminished as well. But then, like you're saying, and this was, again, working people were behind this. Working people wanted this, and they got it. This was one of those New Deal banking reforms. But by the time the 1990s roll around, what we see is deregulations in place in terms of the banking system and the financial sector. And then in 1999, you get rid of Glass-Steagall, and that begins to allow the rise of these new financial conglomerates, where they often are privileging taking risk over acting prudently, and that influenced the whole lending mechanism and really set the stage, a lot of experts think, for the financial crisis of 2007 and 2008.
I'd like to talk a little bit more about the decline of working people's engagement with banking policy. How did that happen? When did that happen? I mean, and how engaged were they? And apparently, that doesn't seem to be the case anymore, correct?
Working people were very engaged in banking policy in the late 19th century and into the 20th century. I mean, if you look at a history textbook, you hear about the William Jennings Bryan, the Free Silver campaign in 1896. But the thing is that engagement continues into the following decades. So working people, they wanted a savings bank at the post office, and they lobbied for it, and they got it. They wanted to have curbs and regulations on Wall Street. They got it. They wanted to have if you're going to have a central bank, they wanted to have some type of public accountability. And a big thing they wanted to have an insurance program to guarantee their bank deposits. And so that's how we get the FDIC. And literally, you could go into just local union meetings or national conventions back in those days, and they would be debating and talking about banking policy, about the kind of reforms they wanted. They would be communicating this to their members of Congress. This is the way that a big part of what unions were talking about at that time. Unions talked about that on a regular basis. And the irony is that the very success of what they wanted actually in the long term undermined their engagement. So what I mean by that is when you start getting those reforms in place and the banking system starts operating more in the interest of working people, it starts operating in a way that isn't creating kind of problems it traditionally had. Well, at that point, working people start to take their eyes off the ball a bit. They take it for granted, and they aren't engaged in the policy in the same way. And so in the middle of the 20th century, the banking system is operating pretty well as far as looking after the interests of the average citizen, as opposed to, just what bankers are trying to maximize their profits and things like that. Well, by the end of the 20th century, working people aren't talking about banking like they had been at the beginning of the century. And there's a big push to deregulate and a lot of lobbying around that. And then you begin to see these changes happen towards the end of the 20th century in the 1990s, getting rid of Glass-Steagall, other things like that. And that really sets the stage. So working people and labor unions had an essential role as watchdogs of the financial sector for many years. And unfortunately, that is just not the way that things operate anymore.
How do we become a watchdog again? Is this going to take, well, it sounds like collective action. And will it take a crisis in the banking industry? You know that eventually something like that is going to happen, don't you?
Well, see, the collective action is absolutely right. It does take collective action. So the reason why working people were able to influence Wall Street, were able to influence the high citadels of finance, is because they were organized. Organized people can beat organized money. And so organized working people and their labor unions were able to influence policy. And part of the story is also the weakening of labor unions that we see towards the very end of the 20th century, too. I mean, that's part of the story as well. But it used to be like, that in these union meetings, people, they knew about banking policy. They were engaged with the issue. They were talking about it. They were informed about it. They were educated about it. They were educating one another. And so you're going to have those two things going together. People are informed about it, and also they're organized to do something about it. And that's, where things are not as strong as they used to be.
I'm trying to be as optimistic as I can here. And sometimes that's hard to do, especially seeing the climate that we're in right now. But with the weakening of unions and the power of Wall Street, I mean, Wall Street is controlling everything today. If it's not a publicly held company, it's private equity. You know that. How can this be done in a climate like that, in your opinion, if it can be done?
Well, so the subtitle to my book is The American Struggle to Make Banking Democratic. And it was a struggle. And look, if you'd have gone back 100 years ago, before those New Deal reforms, before we started getting those banking reforms, it looked a lot the same way, where you had figures like J.P. Morgan and Wall Street, and they seemed like they were omnipotent. They seemed like they had all the power in the world. And people would not have guessed that a few decades later, you would have got these reforms in place that would have started to curb their power, that would have started to defang them and bring them under control. So that's my optimistic message, is things can change pretty quick. But you do have to be engaged with the issue, you do have to be informed with it, and you do have to be organized. And so that's something that you need to have.
So I think the message, the takeaway here, more people have to take a deep dive into labor history and see what happened maybe 100, 120 years ago. And the bottom line is it can be done. If it was done then, it could be done now, right?
That's absolutely right. If it was done then, it can be done now. And I think one thing is that we've been sort of trained to think that banking and finance are too complicated for the average person to understand. And the thing is that in the early 20th century, workers were not intimidated by these ideas, by these subjects. They were not intimidated by money, by banking. They thought they could understand it, and they did understand it. And because they understood it, they were able to then take collective action to do something about it. So I think that's a big step, is not to be intimidated by these questions, to see yourself as a citizen in a democracy who has something to say on the subject, and you've got to start from there.
Those are fighting words. Keep the intimidation in the back seat. Keep moving forward. I like that. Christopher Shaw, our featured guest on behalf of Labor 131, as we commemorate and celebrate the 131st anniversary of the creation of Labor Day. You take care. Stay in touch with us, okay?
Okay. Thanks for having me. Good talking to you today.
And that'll be it for another edition of America's Workforce. Coming up on Monday, the Economic Policy Institute and another episode of Labor 131. Until then, all of you have a safe and wonderful weekend.